We're here with Russell Perlman from Smart Money. Now, 20 years ago, well, I was in the 5th grade, actually, and, and Nirvana had the #1 single, It Smells Like Teen Spirit, if you remember, the naked baby on the album cover. But that was when Smart Money was founded. And that gives us a fun opportunity. Russell Perlman joining us. Tell us which stocks since 1992 have actually been the biggest winners.
And I was in my
50s.
I was in my 50s.
No, that's not true. But
and full disclosure, I was listening to Nirvana as a freshman in college in 1992. But I have been around for a while at Smart Money, and again, this is our 20th anniversary. The issue's out
Congratulations.
today. Thank you. So for our look at the 10 best stocks of the past 20 years, we looked for publicly traded stocks in 1992. So that takes care of the Googles of the world that have come out since. And they had to be among the 3,000 largest stocks. So that's a big list, right? So some were not surprising. You know, Oracle makes that list, and Celgene and Biogen, so two big biotech companies that had big breakthrough. But number 2 and number 1 were the ones that were most surprising to me.
And I have to say, when I saw this list, I was stunned at what came in
number
1.
Oh, and also most importantly, Apple not on the list. Apple is up about 3,500% in 20 years. Now, that's pretty good. You started with $1,000 in April 1992.
But
you'd have $35,000 now, right? That's pretty good.
But clocking in at 19,000% was
Kansas City Southern,
Yeah.
a railroad company. Now, you might be kind of shocked. Wow, how could something invented in the 1840s be one of the best stocks of the past 20 years? Well, if you look at the railroad industry in the 1990s, it's in bad shape. 1992, we're still kind of a bad economy, kind of like now. And Kansas City Southern.
We got a 10-year chart of Kansas City Southern we're showing people.
Kansas City Southern is not just a railroad at the time. It's a conglomerate. It's also a financial services firm.
Yeah, I mean,
it owns Janus Mutual Funds. So you look at the good things that have happened to the railroad industry in the past 20 years. First, NAFTA, huge benefit for all railroads as they get to ship stuff to Mexico. Secondly, they spin off Janus in 2000. Everyone at the time thinks, oh, I should go with Janus, the money fund. Well, the railroad was the place to go. And as Warren Buffett has shown over the past 5 years, really, since he made his big purchase, the railroad industry is significantly restructured. They have a lot of pricing power because commodity prices have done really well. And they've just become a lot more efficient, and the railroad industry is flourishing. It's not just Kansas City Southern, but Burlington Northern and Norfolk Southern.
And Kansas City Southern is unique among railroads. Most railroads go east-west. Kansas City Southern also goes south.
Right. Their big benefit was those railroad tracks into Mexico and to more, even as far as Panama. So yes, that's right. $1,000 in April 1992, you would have $190,000 now. How crazy is that?
Can we dial up the Wayback Machine?
I was going to say, so that makes up for a lot of portfolio mistakes. If you have 1 or 2 stocks like this, you can deal with.
And you held them the whole time.
And you held them the whole time. That's right.
Talk about, I saw a bunch of tech names on there, 3 in particular, and none of which actually are near their peak. They're all well below where they were during the dot-com crash. We're talking about Oracle, Qualcomm, and EMC are also on the list.
Right. But yes, they were higher in the peak, but they have recaptured a lot of those gains. Particularly Qualcomm, because you look at Qualcomm, they've been a huge beneficiary of this move from, I don't want to say dumb smartphone, but just kind of your basic phone to smartphone technology.
Yeah, they license the CDMA standard, of course. They own that, and everybody pays royalties to them, but they also have chips in the iPhone.
That's right. And essentially, if it's a smartphone, then you either pay Qualcomm for the chips or you pay to license their technology. So they're everywhere, and really the growth of mobile phones around the world has benefited the Qualcomm of the world. And Oracle has pretty much been a giant. They started out as a database software firm, and they just keep buying and buying other business-to-business software firms.
Yeah, application software.
And have done extremely well, and they've eaten every other competitor, as had Larry Ellison.
And meanwhile, what's interesting, one of my favorite stories here with EMC is, of course, the VMware stake, right? This is one of the best investments of the best technology investments of the past 10 years. EMC bought VMware, the software maker, for $600 million back in, I want to say, 2004, and today VMware is worth $40 billion?
That's right. That's one of the reasons.
And they own 80% of it still?
That's right. That's why EMC is on this list, because it's kind of been a backdoor way to get into that
hottest
innovative
trend
software
in technology today.
Right. Yeah.
Squeezing a lot more out of the servers you got in your data center. You can squeeze a lot more computing out of them.
That's right.
And the biotech stuff, though, I mean, I always felt like the only way you could invest in biotech was basically to kind of buy the field.
That's right.
You didn't buy individual names in biotechnology the way you would in chip makers or software. You had to buy the field because you had to have
you didn't know the
a couple
winners.
of the home runs.
Yeah.
Right.
That's right. You could afford a bunch of busts if you had someone like Biogen, who has these huge breakthroughs in multiple sclerosis drugs, and Celgene with blood cancer drugs. And so you have, both of them are up 6,000+% over the past 20 years.
Okay, but you've also got, biotech stocks that have gone basically to zero.
That's right.
Because their testing failed, their drug products didn't come through, and they ended up being a complete loser.
Yeah, it's certainly, as you said, Bob, it is a good idea to spread your bets in that type of sector, because if you have 5 or 6 that go from minus 100%, you need a 6,000+% gain to balance your portfolio.
If each company has one drug, that's a lot of leverage.
That's right.
Positive or minus.
That's
or
right.
negative.
The one, I have to say that the one that really was surprising to me was the second one on our list, which is Middleby. It's up 14,000+%. Middleby.
Pizza ovens.
Yes, pizza ovens. That's right. It's industrial strength ovens and ranges. And I had to look up what Middleby. I had no idea what Middleby was when I first put together this list. And it turns out that they have just been really good. They started in pizza ovens, and then they kind of diversified, buying up kind of one-off innovative ovens and restaurant equipment. And now they claim to be 1 out of every 3 restaurants in the country. And if there's one trend that certainly has been undeniable over the past 20 years, is people eat out more. And there are a lot more restaurants now than there were 20 years ago. And these guys have just capitalized.
That's really
off of
true.
it.
I mean, and restaurants have just upgraded all their equipment. That's what are a lot of these going into homes, these industrial?
No, these are very much going into restaurants only, and it's everything from things that cook faster, that are cleaner, that save you on labor costs, and they've also just done a really good job integrating all the acquisitions they've had. They've been kind of like the Danaher of the restaurant business. It's one of these places where they buy smaller firms and they can then leverage it across their whole sales force, and so they could go into potential restaurants and say, look, we can give you pretty much cashier all the way back to the garbage disposal.
So what's the winner for the next 20 years?
Oh, that I wish. But I will tell you, it will not be Apple, because you look at like what the winners was.
Really, at $500, you don't think it's going to 4,000?
Yeah. When you look at like what was from 70 to 92, that was like the GEs of the world, and so from 92 to 2012, maybe it was the Apples, and here the Kansas City Southern. So the winners of the next 20 years will not be the prior winners of this past 20
But
years.
hopefully Smart Money will be there the whole time to tell us all about it.
We
Go
hope
to
so.
smartmoney.com to check out this article.